What's up, guys? Welcome back to DCA. Currently, the market is sitting at prices that we have not seen since the Great Depression of October 28th, 2021. So we're going to analyze whether you should be panicked about the market at the moment or whether this is normal price action. Okay. I'm obviously joking. I think it's a legitimate question to be wondering whether you should be worried or not. But we're going to look at some historical Bitcoin trends and try and answer that question. One thing I want to start off with is just showing something that I've demonstrated multiple times on the channel. And this is when we come down, or rather come up and hit a prior all-time high. This has happened every single time in the past. So let's look at this all-time high that we made in December or November of 2013. We got back to these levels in 2017. Okay. So we finally got back to these levels. And right when we got back to this prior all-time high, we went on a 34% correction. So we've talked about this before many times. We then got above the price. We got above, very similar to us hitting 69,000 now. Got above for a few days, held this line as support actually for a few days, but then we corrected back below. And in fact, went down to the 20-week moving average. Okay, so this is going to be important and something to watch for. So this correction actually was around 34%. All right, then we can come to the peak we made in the end of 2017. So this is December 16th, 2017. We got back to those prices in November and early December. And again, got to the price, corrected, and this correction was about 17%. Okay, and then we got back above for a couple days and had another correction. This one was about 12%. Okay, we did not go to the 20-week moving average, but you'll remember that this was almost a characteristic of the early 2021 bull rally that we saw. And for a lot of people was a sign that when we finally got back to the 20-week, we were going to fall right through it. It's much healthier for the market to see multiple tests of the 20-week rather than just flying above it and getting this large separation for such a length of time. Now, the question is that we've hit this prior all-time high. In my opinion, and I've been saying this for quite a while now, I would not doubt that we've hit it. People take some profits because you have to remember, people, if you were a savvy investor, you were buying in this entire time here. You were buying in and buying more as you went down. So on the DCA index, once we started getting below 50 here, okay, people are going to take profits. I wouldn't doubt at all if we come back down to the 20-week. This is trending upwards. This 20-week moving average is trending up. And I just wouldn't doubt if we came down to it. So right now it's sitting at around 48,000 at the moment. Okay. So one other thing you'll note, we are in this sort of, I guess you could call it a macro, but it's more in the grand scheme of things, more of almost a local uptrend. So we're on this uptrend. And the interesting part is this uptrend perfectly coincides with the 20-week moving average. So I think it would be very healthy for the market to shake out a lot of the weak hands. We come down, we come off of this level and then continue up. Now, if we go below the 20-week, then that's another question. That's another entire issue. Then we could certainly go much lower. And we've seen it in the past. When you're below the 20-week, you trend down. When you're above the 20-week, you trend up. It's just how it is. Okay. So when you're above it, you tend to stay above. When you're below, you tend to stay below. So it's definitely going to be interesting what happens from here. We could even go sideways. The 20-week continues to trend upwards and we contact it somewhere out here in January. Okay. So it's just something to watch for, guys. Now, the more important thing I want to talk about today is this. What you're looking at here is the price. Okay, so this is the pink is your price over the 20-week moving average. If you're at zero, for instance, this green line is at zero. When you're at zero, you're at the 20-week moving average. For example, right here on May, let's see, May 9th or so. I guess it's May 13th. Okay, so on May 13th, we were at the 20-week moving average. Now, what's interesting is if you look, when we're below the 20-week moving average, we're typically in a bear market. So this would be when we came below the 20-week in 2018, and we came below this 20-week moving average, and we're not able to consistently get above it. We got above it every once in a while for just a day or two, but we're not able to ever hold it as support. In fact, it acted as resistance multiple times. And then we finally got above it in early 2019. Okay, we got above in March of 2019, but critically, when we tried to hold it as support here in August and then in September, we were not able to. We fell through. It acted as resistance for a while. We weakly got above, and then finally, we were able to get above and actually hold above in April after the COVID pandemic. And you could say was some of that due to the stimulus package, all the free money being printed. And that's a whole nother thing for another discussion. Okay. Nonetheless, we got above it and held it as support, confirming the bull market. So we confirmed it here in September and October. So you can see when we're hitting this green line down here, that means we're above the 20-week. Now, here's what I want to show you guys. Typically, in a bear market, okay, in a bear market, we cannot get above this 20-week moving average. But in a bull market, this pink line, which is right at about 60% above the 20-week moving average, acts as a level of resistance that we have tested numerous times in the past. So at this pink line, and we're talking anywhere from 60 up to 100% above, because sometimes we get above for a very short amount of time, maybe just a week or two. But in general, this line right here has acted as a resistance level. 1, 2, here we were just above for a couple days. 3, 4, 5, 6, again above just for a couple days. 7, and then now 8. Now, critically, you'll notice that each time this has happened, it has been in the setting of a bull market, where getting rejected by this line has sent us back down to the 20-week moving average, or close to it anyway, and then the bull market has continued. Now, you'll notice another thing. This red line is a fitted line showing the predicted maximum extension above the 20-week moving average, okay? And we hit that line in January, okay? And now we have not hit that again. We hit that in January, then our market cycle peak actually occurred down here at the pink line. Now we've hit that pink line again, and we're experiencing a correction at the moment. So that begs the question whether we're going to see this trend that we've seen numerous times in the past, where we get rejected towards the 20-week moving average in a continuance of the bull market rally. So, by the way, the orange boxes are just demonstrating the various bull markets. If you go back and look at 2017, just consistently hitting this line. Oh, and one thing I forgot to mention, when we hit this pink line in the past, 40% correction, 23% correction, 40, 35, 33, 39, 40. In fact, this one occurred at a very similar situation to what we're seeing right now. We came and approached this pink line, this 60% above the 20-week moving average, at the same time where we're matching a prior all-time high for price. So we corrected and got sent back down to the 20-week. What I wouldn't be absolutely surprised to see if we came down to this 20-week, shake out a lot of the weak hands, and then continue the bull rally. Okay, it might take some time. It's certainly going to make a lot of people anxious. I just feel like when you've been going up as much as we have, just look in the past, let's see, so starting back in July, we're up 123% in 5 months. I don't know of any other asset class which is doing that. And we're sitting at 101% right now. So keep it all in perspective, guys. I think there's a lot of evidence that the market cycle is not over. I think you have to be prepared for large corrections in crypto. You can't expect 2x, 3x, 4x, 5x and not be willing to take 20, 30, 40, 50% hits along the way. Okay. If you're up 10x and you take a 50% hit, you're still up 5x. So keep it in perspective, guys. That's it for this one. If you guys like this content, hit like and subscribe. Head over to the Telegram channel if you're interested in the DCA index models. These are models which will sort of indicate to you where the market cycle peaks and or bottoms may be occurring, and it can help guide your investing strategy. And until next time, guys, as usual, see ya.